Hello and welcome, where today we'll be diving into the world of exchange-traded funds, specifically focusing on dividends. Now, you might ask, what exactly are exchange-traded funds? They're simply investment funds traded on stock exchanges, much like individual stocks. They're designed to track the performance of specific indexes, sectors, commodities, or investment strategies. Now, why would anyone consider investing in ETFs? Well, they offer a way to diversify your investment portfolio without the need to buy each individual stock or bond. They provide exposure to a wide range of assets, allowing you to spread your risk and potentially improve your returns over time. Plus, they're easy to buy and sell throughout the trading day, offering flexibility that other investments may not. But why focus on dividends? Dividends represent a portion of a company's earnings distributed to shareholders. They provide a steady stream of income, which can be particularly attractive in volatile markets. And here's the kicker. When reinvested, these dividends can significantly boost your investment's growth over time. Now imagine combining the benefits of ETFs and dividends. You get Dividend ETFs, a type of ETF that focuses on dividend-paying stocks. These ETFs can provide a stable income stream and potential for capital appreciation, making them a compelling option for investors. Now that we've covered the basics, let's shift gears and talk about the meat of our discussion today. 3 dividend ETFs I'm eyeing for growth in 2025. These are ETFs that I believe have significant potential for growth and can provide a decent dividend income. Remember, investing always comes with risks, and it's crucial to do your own research and consider your financial goals and risk tolerance before making any investment decisions. Now let's delve into the first of these 3 ETFs, the SCHG. Hello viewers, if you are enjoying this content and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us and remember to comment and share. First on the radar, we have SCHG, or the Schwab US Large Cap Growth ETF. A mouthful to say, but an ETF that's worth every syllable. SCHG is a fund managed by Charles Schwab, a name synonymous with investing and financial services. This ETF has been on the investment scene since late 2009, steadily building a reputation for itself as a reliable player in the large-cap growth space. SCHG's primary focus is on large-cap growth stocks. For the uninitiated, large cap refers to companies with a market capitalization of $10 billion or more. These are established, often household name companies that have a proven track record of stability and growth. The growth part of the equation refers to companies that are expected to grow at an above-average rate compared to other market players. So, when you invest in SCHG, you're essentially buying into a diversified portfolio of high-growth, large-cap companies. But what makes SCHG stand out from the crowd? Well, let's start with its performance. Over the past decade, SCHG has consistently outperformed the S&P 500, a benchmark index for U.S. stocks. This outperformance signifies that the fund's strategy of focusing on large-cap growth stocks has been successful. It's a testament to the fund's ability to pick winners in the growth space. Moreover, SCHG has a commendable dividend yield. Dividends are a share of a company's profits paid out to shareholders. They're a great way for investors to earn passive income. As of now, SCHG has a dividend yield of around 1.5%. While this might not seem like a lot, it's actually quite impressive for a growth-focused ETF. See, growth companies often reinvest their profits back into the business to fuel further growth instead of paying them out as dividends. So, a growth ETF that manages to provide a solid dividend yield is a rare find indeed. But why is SCHG a good choice for growth in 2025? Well, several reasons. Firstly, the fund's past performance indicates its ability to deliver strong returns. Remember, past performance is not a guarantee of future results, but it does give us a sense of the fund's potential. Secondly, SCHG's focus on large-cap growth stocks makes it well-positioned to benefit from economic recovery. As economies rebound from the effects of the pandemic, large-cap companies are expected to be among the first to reap the benefits. Their size and resources enable them to adapt to changing market conditions and seize new growth opportunities. This bodes well for SCHG and its investors. Lastly, SCHG's solid dividend yield adds an element of income to the growth equation. Even as you bank on the fund for capital appreciation, you also earn a steady stream of income from dividends. This dual benefit of growth and income makes SCHG a compelling choice for investors eyeing growth in 2025. In conclusion, SCHG brings together the best of both worlds. The potential for high growth offered by large-cap growth stocks, and the steady income provided by dividends. It's a fund that has demonstrated its mettle over the years, outperforming market benchmarks and delivering a solid dividend yield. If you're an investor seeking growth and steady dividends, SCHG is certainly worth considering. With its focus on large-cap growth stocks, SCHG is an attractive option for investors seeking growth and steady dividends. And with that, we wrap up our deep dive into SCHG, the Schwab U.S. Large Cap Growth ETF. Stay tuned as we navigate the exciting world of dividend ETFs. Moving forward, we have the Vanguard Mega Cap Growth ETF, also known as MGK. This is a fund that's been making waves in the investment world, and for good reason. But before we delve into the details, let's take a brief look at what exactly MGK is. The MGK is an exchange-traded fund managed by the renowned investment company Vanguard. This ETF focuses on mega-cap growth stocks, those big, powerful companies that dominate their respective sectors. Think of your tech giants, your pharmaceutical leaders, your financial juggernauts. These are the types of companies that MGK is investing in. Now, why is this important? Mega-cap growth stocks are not just any stocks. These are companies with a market capitalization of over $200 billion. They are the giants of the corporate world, the ones that have the muscle, the resources, and the resilience to weather economic storms and come out stronger. When you invest in MGK, you're investing in these titans of industry. So, let's talk about performance. Over the past decade, MGK has consistently outperformed the broader market index. This is due in large part to its focus on growth stocks, which are companies that are expected to grow at an above-average rate compared to other companies in the market. In a world that's becoming increasingly digital and tech-driven, these growth companies are often at the forefront of innovation and disruption, driving economic growth and, by extension, stock market growth. But what about the future? Why is MGK a promising choice for growth in 2025? To understand this, we need to look at the broader economic landscape. We're living in an era of rapid technological advancement, industries are being transformed, new markets are being created, and the companies leading this change are often those very same mega-cap growth stocks that MGK invests in. Take the tech sector, for example. Companies like Apple, Google, and Microsoft are not just surviving in this new digital era, they're thriving. They're driving the development of new technologies, from artificial intelligence to cloud computing, and they're reaping the financial rewards. Similarly, in the healthcare sector, pharmaceutical giants are leading the charge in medical innovation, creating value for their shareholders along the way. Moreover, MGK's focus on mega-cap stocks offers a level of stability that's often missing in growth-focused investments. These companies have proven business models, strong cash flows, and the ability to withstand economic downturns. This makes MGK a potentially less risky bet for those eyeing growth in 2025. But of course, it's important to remember that past performance is not a guarantee of future results. Investing in ETFs like MGK comes with risks, just like any other investment. The stock market can be volatile, and while mega-cap growth stocks have the potential for high returns, they can also experience significant declines. It's crucial to do your own research, understand your risk tolerance, and consider your financial goals before investing. So there you have it, MGK, a potent mix of mega-cap growth stocks that could be a powerhouse in your portfolio. This ETF offers a unique blend of growth potential and relative stability, making it a compelling choice for those looking to capitalize on the growth opportunities of the coming years. Whether you're a seasoned investor or just starting out, MGK could be the ticket to unlocking significant growth in your investment portfolio. Last but not least, we have VGT, the Vanguard Information Technology ETF. Diving right in, VGT is an exchange-traded fund or ETF managed by the investment powerhouse Vanguard. This ETF is specifically designed to track the performance of the MSCI US Investable Market Information Technology 25/50th Index, an index made up of stocks of large, mid, and small-size US companies within the information technology sector. This includes companies in areas such as software, technology hardware, semiconductors, and IT services. The beauty of VGT lies in its exposure to the tech sector. As we currently live in an era where technology is interwoven into virtually every aspect of our lives, it's no surprise that tech stocks have been some of the best performers in recent years. As a result, an investment in VGT offers a broad exposure to this thriving sector, which could potentially provide significant growth opportunities. VGT's portfolio is a veritable who's who of tech giants with top holdings including the likes of Apple, Microsoft, and Visa. While these companies are already well established, they continue to innovate and grow, driving the tech sector forward. By investing in VGT, you're essentially getting a piece of these tech titans and their continued success. Let's talk about performance. VGT has a long and impressive track record. Since its inception in 2004, VGT has consistently outperformed the broader market. Over the past decade, it has delivered an average annual return of over 12%, significantly outpacing the S&P 500. Now let's look ahead to 2025. The tech sector is expected to continue its upward trend, driven by the ongoing digital transformation, the rise of artificial intelligence, and the expansion of cloud computing, to name just a few. This suggests that VGT could be well positioned for continued growth in the coming years. But as with any investment, it's important to consider the risks. The tech sector can be volatile, and while it has been a strong performer in recent years, past performance is not a guarantee of future results. However, VGT's diversified approach, investing in a broad range of tech companies, can help to mitigate some of this risk. Furthermore, VGT has a low expense ratio, which is the annual fee that funds charge their shareholders. It currently sits at just 0.10%, making it a cost-effective choice for those looking to gain exposure to the tech sector. In terms of dividends, while VGT may not be the highest-yielding ETF out there, it does offer a steady income stream. Its current yield sits at around 1.2%, which when combined with its strong growth potential makes it an attractive option for investors looking for a blend of income and growth. In conclusion, VGT, with its focus on the booming information technology sector, its impressive performance history, and its potential for future growth presents a compelling case for inclusion in your investment portfolio. Whether you're a seasoned investor or just starting out, VGT offers a way to tap into the potential of the tech sector in a single diversified investment. So, if you're eyeing growth for 2025 and beyond, VGT, the Vanguard Information Technology ETF, could be a key player in capitalizing on the ongoing tech boom. It's a tech-focused ETF that offers broad exposure to the sector, a track record of strong performance, and a potential for future growth, all wrapped up in a low-cost package. VGT, a tech-focused ETF, could be a key player in capitalizing on the ongoing tech boom. So there you have it, 3 dividend ETFs that are worth eyeing for growth in 2025. Let's quickly circle back to what we've discussed. We started with the Schwab US Large Cap Growth ETF, also known as SCHG. This ETF is a fantastic option for investors looking for exposure to large US companies with growth characteristics. It's a solid performer with a history of reliable returns, and it's definitely one to keep on your radar. Next up, we talked about the Vanguard Megacap Growth ETF, or MGK. This ETF is unique in that it targets the largest growth companies in the US market. It provides an opportunity to invest in these mega-cap companies which have shown consistent growth and strong performance over time. It's a great choice for those who want a piece of the big players in the market. Lastly, we delved into the Vanguard Information Technology ETF, VGT. This is an ETF that focuses on tech companies, a sector that has shown remarkable growth and resilience in recent years. VGT is an excellent choice for those who believe in the future of technology and want to invest in this booming sector. Remember, investing in ETFs is not just about picking the ones with the highest yields. It's about understanding your investment goals, your risk tolerance, and your time horizon. It's about diversification and balancing your portfolio to weather market fluctuations. It's also crucial to do your own research before making investment decisions. While these 3 ETFs are worth considering, they may not necessarily be the right fit for everyone. Look into their holdings, their performance history, their expense ratios, and other factors that might influence their future performance. And of course, remember that this video is not financial advice, but merely suggestions based on analysis and projections. Always consult with a financial advisor or conduct thorough research before making any investment decisions. Investing can be a complex journey, but it can also be incredibly rewarding. By staying informed, making thoughtful decisions, and continuously learning, you can navigate the financial markets with confidence and hopefully see your investments grow over time. Before we wrap up, I want to remind you that investing is not a sprint, but a marathon. It's about consistent growth over time, not instant gains. So, be patient, stay the course, and keep an eye on these promising ETFs as we move into 2025. Thank you for watching. If you found value in this video, don't forget to subscribe, like, and share it with your fellow investors. Stay tuned for more insightful content.